update for this Monday, and we're at the 21st of March, 2022, 8:15 a.m. Central Time. As we look at the market, most of the stocks are stable. I think that's the right word. It's interesting because over the weekend, as I was doing my weekend updates, I'm looking at some buy signals coming in, and I'm going, where can this market go? Do you actually think it can go up to a new high? I don't. So I think the buy signals will prove to be a trap. And I'm looking for the market to try its darn best to reverse off of these signals and throw out another sell signal. As you notice, the energy market continues to grind its way higher. We're back up in Brent, pushing the 112.5 area. Grains taking off again, especially wheat. Maripol's coming under serious attack. And Russia gave until 5 a.m., I guess it was, to be out of Maripol. Otherwise, it looks to me like they're going to level the city. I know you don't like hearing that, but it's the way it is. That seems to be plan B, which is if we can't beat them one way, let's just level the cities and leave nothing there for us to worry about. I've got a feeling that's what's going on. In the metal markets, you're seeing silver gaining on gold a little bit. That's interesting. Copper had a big run-up last week. It can afford to churn here as I see it for a little bit, but I think you have to have a bullish bias to it because at the end of the day, it's still going to be an economy around the world that as much as we have inflation, it's got to get the supply chains filled up. Dollar up a little bit against a lot of currencies there. The curve yield hasn't changed very much at all, but you continue in the downtrend. And today is Fed Speak Day. So what do I mean by that? Well, in a nutshell, a number of Federal Reserve members, including Fed Chair Powell, speak today. We've already seen Mr. Bostic of the Atlanta Fed. He's done his speaking talking about interest rates. We're going to get more of that, but the Fed Chair Powell is going to be looked at very hard. Chicago Federal Reserve February activity index up 0.51, but that's not an improvement. They even made it worse. In January, we had a 0.69 reading. They lowered it to 0.59, and we've dropped from there. So I don't view that as very friendly. Now, I want to remind you, we have a trading kit available, whether you're a sophisticated trader or not, that helps a lot with what the Fed is doing. We have a cause and effect sheet in there. Where, going back to the Volcker days, I created this sheet for my brokers at that time to understand how to look at M1, M2, M3, and they're going to become very important. Why? Because the Fed's going to attack the balance sheet very shortly. And as it attacks that, you're going to learn how to work with that because taking that number down, we have a $1.5 trillion number. They'll probably go $100 billion a month. They'll be taking that down. What does that mean? There's that sheet, and I think you'll find it interesting. We also link into a lot of the mercantile courses, the CME group. And you'll see the different ones they come out with. We help you with that. So how do you get all this information, including if you want access to our research, what's going on, so you can sample things, just go to our website, www.iraepstein.com. Top left, you'll see free offers. Give it a click, sign up for what you want, and we'll make sure we get everything out to you. I'm Ira. You have a great day. I'll see you at the end of the day with our market wrap-ups. Take care now.